You're listening to the Money Hour with Mitchell and Mercer. Now live in the studio, local mortgage and finance experts Tina Mitchell and Mike Mercer.
Welcome to the Money Hour with Mitchell and Mercer, the Saturday, November 3rd show. I'm Tina Mitchell, Mortgage Diva, and sitting to my left is my co-host, the Mortgage Master, Mike Mercer.
Good afternoon to you, Tina.
It's going to be an awesome show.
I'm really excited about our guest today.
Thank you for taking time with us to talk money. Mike and I are here every Saturday on AM 1090 at 3 o'clock. Our goal is to keep you up to date on the latest news and trends in our local economy. Keep us tuned in, and we will definitely keep you informed on everything money.
So, Tina, are you ready?
I am.
All right. Well, our first guest, I've known Rich Keal for several years, and Rich has immensely enjoyed independence in the financial and risk management arena since October of 1985. You've been in this business for a long time. Yeah. Is a truly independent professional and has traveled the country seeking the best and brightest minds, reserving judgment until compiling all the information possible from all the major different industries and disciplines in financial services. And he calls it kind of a truly Jerry Maguire experience in his life, and refers in referring to this as his revelation. So, Rich specializes in helping people utilize institutionally based financial strategies and relationships to achieve their maximum potential. And Rich is a registered investment advisor for Generation Wealth Advisors, and is also one of the principals. So, Rich, welcome.
Thank you. Thanks for having me.
Yeah, and I know this is going to be a really good discussion because I really enjoy your angle at things. So,
thank you.
So, what is wrong with Wall Street?
Well, we probably don't have enough time to have that complete conversation, but I would say that one of the biggest issues today is the ability to have access to alternative investments and advice that steers people towards more of a low-risk, high-reward outcome. And most of Wall Street that's developed out of 1971 after Mr. Nixon took us off the gold standard, and we formed the ERISA Act in 1974, which basically created the 401k and the IRA and that sort of thing. And ultimately, ever since, we've been printing money. And so a lot of the problems that ensued, most folks may be too young to remember the S&L crisis that we had in the 80s.
I've heard about it.
Yeah, I was there for that. I was fairly new in the business, scratching my head going, what's going on here? But then ultimately, about 10 years later, I start to see these cycles. In the 90s, we repealed the Glass-Steagall Act, and that was kind of the match that lit the fire for a lot of what's going on in your industry today. And I just am totally fascinated about monetary policy and government policies that ultimately tend to light these fires that create these problems.
Yeah.
So those are the underpinnings that we like to look at. And just a matter of disclosure, I'd like to share that we have two companies, essentially, Brian and I. Brian's on here on this channel too. Generational Wealth Partners is more of our risk management division. Generational Wealth Advisors is our registered investment advisory firm. It's fee only. We don't have assets under management, but we spend most of our days and time talking about economic policy. Both of us are extremely fascinated about that. So,
An exciting conversation to have.
Yeah, I mean, we think it is. I mean, we're pretty boring at parties. But,
I'm sure you're not boring. I'm sure people just want to listen to all of your advice. And on that note, I like having the experience that you do in the industry and going through these historical times now and what we've seen before. There's always recovery. We always follow historical trends. And I think on that note, I just want to say we're going to get out of this. We always do. It's just a matter of how and when. And we all have our own opinions. I would be really interested in yours, Rich, as far as how you see the financial world moving forward.
Well, I feel like I have a pretty unique view of the world. I live part-time in a former communist country where my wife is from, an Eastern Bloc country of Hungary.
Really?
And I've watched the European Central Bank and what's going on with monetary policy there. And most people are aware that the troubles with Greece, Spain, Italy, and Portugal, and those countries. In fact, I was there in Spain and Portugal this summer, and there's a lot of pain out there in the world, and there are a lot of issues that are going to have to be worked through because of the weakening of our currency by the printing of money by governments. And it's going to be an interesting time that we're facing, and So, I mean, there's a lot of political arguments about, who's right, who's wrong, but
Sure.
Time will tell. But you see the proliferation of gold buying going on in the world and people looking for hard assets. I really like real estate a lot. Most of the institutions that I follow, they like real estate, and especially at cheap rates like we've been talking about on your show here.
Yep.
So, I mean, I don't have a crystal ball. Mine cracked. And
I was just going to ask you, where is it?
yeah, but no, mine's broken. And so we're going to resort to a Ouija board. No, I'm just kidding.
Hey, Rich, we did talk about Brian. Could you introduce who we have on the phone, your partner?
Oh, yeah. Brian Bewley is my young partner, my protege. I'm extremely proud to work with this. Yeah, we call him Rain Man. I've been excited since the day we met and we started working together, and we talk almost every day, even when I'm in Europe, and talk about what's going on in the world. He's got an amazing background for a young man, and so say hi, Rain Man.
Hi, everyone.
So since he's calling you a young man and you're not here in studio but on the phone, how old are you, Brian?
I just turned the ripe old age of 30.
Wow, you are definitely young.
Just a kid.
Yeah.
So, so what, I don't know if this would go to, this question would be for you or for Brian, but how do you recommend we catch up when people are so far behind? A lot of people are so far behind on kind of the retirement 8-ball.
Well, I'll start this and then I'll let Brian finish it, but I think the propensity is for people to feel like they need to gamble and go ahead to the casino and take on even more risk, which has really been a dilemma for a lot of the seniors out there, the savers.
Sure.
The people that really can't afford to go stick their neck out. Mm-hmm. And so a lot of what we teach has to do with helping people transfer the risk to different institutions or partner with institutions that will assume a lot of that risk. Brian, would you like to add anything to that?
Absolutely. I think that it kind of ties back into what you were talking earlier about regarding the 401k market. And everybody has bought into the idea of accumulating money in an account in equities and stocks and bonds. And what you end up finding out is that market is not delivering the results that people need to ultimately retire, however you define it. And so I tend to look at opportunities to create cash flow because, when you look at the relationship between a certain investment and its resulting cash flow, like real estate, and compare that to a speculative investment in the market, you really can't compare the results properly managed because it's a totally different game. And so if you look at somebody who has $1 million portfolio and somebody that has a $200,000 portfolio, and both of them have the same level of income generating capability off that portfolio, you have to ask yourself, what's the better strategy?
One of our new clients that said something to me the other day, she's a very successful young real estate investor. It just blew me away. I said, I was joking with her. I said, she's 26. I said, why did you start so late? She already owns a nice portfolio.
So she's out there picking up a lot of real estate.
Yeah, I mean, she just jumped on it, and she's been here on this planet before, I think. But she just had the foresight to say to me about her attorney's been trying to get her into the stock market, and she said, well, how do I hedge a lie?
Wow.
And I mean, I'm not,
I
don't want to bash
sure.
people that prefer that market, but, hard assets are hard assets.
Yeah. So Rich, you had mentioned high reward, low risk philosophy. Can you explain that in a little more detail for our listeners?
Yeah, it comes from my understanding of risk management and helping people create strategies through the use of the insurance institutions. Brian and I have a process that we teach people and how to use the mutual insurance industry and their backstop there's annuities to some stockbrokers or other folks that's kind of a dirty word, but if you use those instruments in concert with other financial instruments, there are ways to enhance returns. There's tax efficiencies and so on. And there's a story I'd like maybe if we have time I'll share it about a case that we're working on recently. But
if you share it with us.
Oh well, I have a family friend back east, and his mother had a affluent family. She had about $10 million in the market, knew nothing about her. It's an inherited estate, and her advisor was a bank, a small bank in the community, and they blew through about $6 million because of risk and not curbing her spending. And so anyway, because of some legal action, they're going to get some of that money back. But we had just mentioned or recommended to them, why don't you just ladder some annuities, be guaranteed, and take income for the rest of your life and call it good and have a happy, enjoyable life. So that could be success for some people. Mm-hmm. So we don't really have a bias in terms of, or an anti-bias towards any particular tool. Mm-hmm. We try to integrate them all. And so...
But I think a lot of people would be interested, especially in this environment, if you're listening and you want to know more about products that have guaranteed principal and are tax protected from future taxes. Pick up the phone, give the show a call, 1-888-776-1090. Again, it's 1-888-776-1090, or you can reach us online at themoneyhour.com. We will directly connect you with Rich, and he can give you all of the details about some great products that are out there that can really protect you in this environment.
So, Rich, you've talked quite a bit about this, and you and I have personally talked about this, but, we finance everything you buy, right?
Right.
Everything gets financed, depending on how you look at it. So tell us about the power of understanding, opportunity costs. That's related to that. So.
I'd love to. I met a gentleman about 10 years ago who wrote a book called Becoming Your Own Banker, and he's a product of the Mises Institute. And first thing he ever said to me when I met him in his southern voice, he said, you finance everything you buy. And I looked at him and I go, what do you mean by that? Well, when you pay cash for a car or whatever, you finance it. You give up that which you could have earned.
Yep.
And so that's been the basis for a lot of our work, is helping people analyze, say, mortgages. What's the best, what's the mortgage choice? Should you do a 15 or a 30-year mortgage? What is the actual cost? And what does it mean to you in terms of giving up or taking on the risk that you could push off to the institution? And that's one of the things we get into a great deal is who's more able to handle the risk, you or B of A. So,
sure.
Brian, this is one of the great aspects of our business, or his performance with spreadsheeting and that sort of thing. That's why I call him Rain Man. So why don't you jump on that a little bit, Brian?
Oh, absolutely. I think most people come to the table with questions about what's the best way to, should I pay down my mortgage? Should I eliminate this or that debt? And what I always have to remind them of is, okay, well, where are you going to get that asset from? Is it coming from a checking or savings account? Is it simply coming from your income? And what if you were to look at the alternative of, saving that money instead of putting it in equity within, whether that's, the house or reducing the balance on a car? We look at alternatives of saving that money in some other financial vehicle and then comparing the interest expense that you're going to incur versus the gain that you're going to experience in whatever asset you allocate that money to. And so when you do that analysis, it's an analysis that most people never consider. And there's a revelation there in that you really don't have to earn nearly as much as you think because of compound interest as what the interest rate is on the note itself. If it's 5 or 6%, you may only have to earn about 2.5 to 3% compounding over time to offset that cost. And when people see these new relationships of money, it changes the their thinking about what is my best move. And one of the most important aspects of this about where you store your equity is the topic of controlling your assets. Because if you store your money in equity in some other asset like a house or a car, the first person you have to go to when you need access to that money again is your banker.
That's
and
a good
we
point,
want
Brian.
to help people learn how to avoid that.
It makes total sense.
Thanks, Brian.
Wow, what a short period of time for such great information. We absolutely will have to have you back. Rich, thank you so much. Brian, thank you for joining in.
Yeah, thank you for having us.
Yeah. Thanks, Brian, for being
here.
Thanks,
guys.
Yep.
And Mike, what do we have exciting coming up next week for our listeners?
Well, Tina, next week we have two guests, Angela Hardy with Prudential Northwest Realty, and a gal named Eleanor Grace, who owns a company called Get Ready List. And she's doing some amazing things with this company. It's going to be a great show. This is Mike Mercer signing off for the Mortgage Diva, Miss Tina Mitchell.
That's me, and this is Tina Mitchell signing off for the Mortgage Master, Mike Mercer. Thank you again, everyone, once again for being here on Saturday, right here, AM 1090. Come back again next Saturday, 3 p.m. Enjoy the rest of your weekend. Thanks.
Thanks, guys. Have a great week.